I created something to be able to give you all a better idea as to what is actually happening. So, here's something that I want to show you all, right? I created this on last night, and I could zoom in more for you to be able to see it. So, I talked about, right, the liquidity vacuum that we're stuck in, deciphering the king dollar regime when cash becomes a black hole for global risk assets. Right now, if you go out and you take a look at what the dollar, when the US dollar index aggressively rallies while equity indices, precious metals, and crude oil slide into unison, like right now, what are they doing? They're sliding into unison. Look, let's start over. Okay. When the liquidity vacuum deciphering the king dollar regime, this is how I said you have a difference between savvy investors versus those who are just out here gambling, especially when it comes to like your option plays and option calls and things of that sort, right? Like, yes, you have an opportunity to make good money on those when the market is trending and moving. Same thing for traders, right? But when we get stuck in a place of not actually understanding what is happening overall, like looking at the bigger picture, this is where you can lose sight. And so you start taking on trades where you're thinking that the market is still getting ready to go long, but the market is getting ready to short itself and you're getting caught. So when the US dollar index aggressively rallies while equity indices, precious metals, and crude oil slide in unison, the market is sending an unmistakable signal. This isn't standard, localized sector rotation. It is a textbook risk off liquidity vacuum. This is where you should be risk off on those option plays. The regime, a dominant macroeconomic framework where institutional players treat cash not as a sideline asset, but as the primary destination. So here's the four catalysts, right? Here's the four catalysts. Cash over yieldless assets. A surging dollar often reflects rising real yields as interest rates stay higher for longer and the opportunity cost of holding non-yield assets like gold spikes. Concurrently, higher discount rates weigh heavily on corporate equity valuations, triggering a synchronized exit into yielding dollar instruments. Here's number two, institutional liquidity squeeze. Institutional liquidity squeeze. As the global reserve and financing currency, the dollar faces massive structural demand when volatility jumps. To cover global margin calls, settle denominated liabilities, or clean up risk parameters, institutions are forced to liquidate their most liquid holdings, equities, bullion, and energy contracts. And we're going to go and look at all of this on the charts. I mean, it presents itself beautifully on the charts. The deflation of risk premiums. Crude oil and gold typically command a premium during times of severe geopolitical anxiety or runaway structure inflation. When both fall alongside rising dollars, it signals demand destruction, fears, or a sharp de escalation of risk premiums, prompting a swift repricing of global growth expectations. That is why when we take a look at news and we get GDP growth rate that comes out, this ties into what is happening with the market. That's why I say the market is tying itself into news, and it has been doing that over the past week. Most people don't know that. This is where it gets. This is This is how you separate, right? Savviness from those who are just gambling. Here's number four, the denominator effect. Because major global asset classes, commodities, and international indices are structurally priced in US dollars, an inverse correlation is mechanically baked into the system. As the relative purchasing power of the greenback strengthens, it inherently requires fewer dollars to acquire the exact same asset base. So, the technical roadmap for the trading desk here at New Level, we're going to track institutional pools, monitor the dollar as it approaches major high time frame liquidity pools, weekly order blocks, or key psychological figures. We're going to identify the turning point, broad equities, risk assets, and precious metals will rarely find a sustainable structural bottom until the dollar prints a clear market structure shift to the downside or completes a definitive sweep of a major high. Risk management until the dollar demonstrates expansionary exhaustion, the path of least resistance across risk assets remain heavily skewed sideways to down. Do not fight the trend when the dollar king rules the board. And that is what's happening right now. That is the difference between a savvy investor, a savvy trader is knowing what is happening. So let's take a look. What is going on with the dollar? As you can see, we could take a look at it on the daily to be able to give you a better idea. Look, massive liquidity run here. Now, this is where the dollar can start taking some rejections because they're here at equal highs here from the move of what happened on back in May of last year. We're back at those same highs of where we were in May last year. So, with the dollar consolidating itself and now trying to create a range, a breakout range, right? We're right here back at the level of what we were in May. And those of you who need to see a clear picture of that, here we'll mark it for you. So here you have that high here and you have this high here. So if you look at the time frame of how long we've been here until this day, that's 413 days. So for 413 days, this is what's been happening with the US dollar. Now the dollar is trying to find a range to break out, and that is why everything is now falling. Crude oil, gold, precious metals, silver, right? Bitcoin. All of them are now pulling back because the dollar is rising. You see, this is us taking a look at gold. You see, the gold done pulled back, right? To a key level of support, where it's breaking that level of support that's there. Silver is at $59. Silver slides again. Look, silver sliding, breaking that key line of support that's there. Bitcoin futures, same thing with Bitcoin. Bitcoin is doing the same exact thing, right? When you look at MES is getting ready to do the same exact thing. Us being up here at all-time highs, now we're getting ready to pull back. MNQ, same exact thing, right? On MNQ, we were up here trading at all-time highs. Now you're getting the pullback. And last but not least, crude oil. And here, let's clear up what I had marked here on crude oil. But you can see the same thing with crude oil, right? So understanding the correlations of of the market, once it starts to decouple itself from things, you have a better idea as to what is happening and taking place. And there is no investor or trader who is going to be able to share that high level of information with you. That was some high level information that I just gave you right there, right? So that's something that I want you to take into consideration. Take that into consideration. Most people are not going to take that into consideration, but you being a new level trader, you being a part of New Level Academy, you will be able to take heed to those things and be able to understand, oh, okay, boom, this is why everything is now pulling back because we're now getting a stronger dollar or a dollar that is trying to be strong to make itself king. So here's another way to be able to see that, right? So even in crypto, you could be able to see it even in crypto, right? So let's go to USDT and we're gonna see USDT dominance. If if USDT dominance is on the rise, then obviously it's in correlation. And look at that. This letting you know that we're risk off. You were risk off here, risk off here, your risk on there, there, your risk off here. And you could go back and when you look at these dates of risk on, risk off with USDT dominance, this is what lets you know that. Look at USDT. So when USDT is down, that means there's money coming out of these cryptos. See that? People are risk off and they've been risk off for a while. So when you have understanding of this, it makes it a lot more easier for you to be able to know how the market moves. Once you understand this, it makes it easier because that's all we're trying to do. We don't want you out here gambling, right? Even if you were a person who wanted to understand Bitcoin dominance, same thing with Bitcoin dominance. You're able to see where everyone is risk off right now in the market. This is risk off opportunity. You should not have any cash or anything held within your stocks or your crypto. After the information that I just gave you, you should be fully risk off. There is no rotation of sectors happening here in the market. There's none. That's why I said the market is pricing itself for GDP growth rate. It's preparing for GDP growth rate, and that's why we're getting nothing but consolidation on today because of that. So if we go back to the newsletter of what I sent out, this is what I sent out and what I told people of what is happening and what is going on. So if you take a look at our roadmap and you track institutional pools, you need to be monitoring the dollar. If you're not monitoring the dollar, how are you going to be able to understand when to be risk on, when to be risk off? And that's why I was saying, like, how is it that a person could be, see, even in crypto, look at the fear and greed. The fear and greed was at a 19 yesterday, it's at a 18 today. It's risk off. You have more outflows going versus inflow in the markets. We're at that time of month where It's very important for you to be able to grasp that understanding. Okay. Broad equities, risk assets, precious metals, they will rarely find a substantial structural bottom until the DXY prints a clear market structure shift. And that's what we need. So we need it to the downside or it completes a definitive sweep of a major high. What is happening? This is why I said at New Level Academy, man, you get nothing but the goods here. You get nothing but the goods. Look, check this out. Let me show you. Let's go back to the dollar. What did we say? We needed a definite sweep of the high, or we need a significant market structure shift of the low, right? We said that. Let's go to a daily. Now, I'm going to zoom all the way back to May. What is happening? What do you see? We're having a sweep of what? The high all the way back in May of 2025. You're having a sweep of the high all the way back in May of 2025. So once we sweep this, then we will have a definitive reason when to hop back into the markets. That's free game. That's next level teaching right there that most people are not going to give you. They're not. They're just not, or they just don't know it themselves. There's no way. I watch a lot of traders, right? And just to be able to see like how they're moving in the markets. And one person in particular who I saw, he was down and he posted this on his Instagram. He was down 770 something $1,000 on options. And I'm like, are you serious? There's no way I would be taking that significant loss, right? Having those contracts, things that is going to decay. There's no way I will be taking that when I have understanding of what is happening here. The dollar is showing itself strong. And anytime the dollar shows itself strong, you're going to have a slip within what? Gold, silver, your precious metals, crude oil, right? Crude oil, all of them. So when you go and you look at them, what do you see? Oh, okay. Gold down, breaking a key level of support here that has been going all the way back to 2025, all the way back to 2023, back here. It's breaking that now. Silver is at $58. It's down 5% today. Look at silver breaking a key level of support all the way back from 2025. 2025, April of 2025. Key level of support broken, right? MNQ. We hit all time highs. Now we're pulling back from all time highs. Same thing with ES. But crude oil was what we were talking about. Look at the slip on crude oil. Crude oil slipping. Why? Because the dollar is showing itself strong. Once you get a sweep of the high on the DXY and we have a clear market structure shift, that's when things are going to start bottoming out. And so you may get cheaper silver, but right now you just need to be risk off until it bottoms itself out and you get a clear structural shift of what's happening on the DXY prior to you being able to jump into these assets again and you be back risk on. See, with it taking off like this, you can't be you have to look from its last low. The dollar is up 4.2%. 4.2%. There's no reason for you to be risk on. You should be risk off. Once it breaks and sweep this high, you want to see what happens after that. If we start consolidating, that means that we're building what? Support. Jeremy, what do you mean if we start consolidating? This is what I mean. If we start doing something that's like this, right? If we start doing this, accumulating right here, then that's when you could say, okay, we're finding support there. It- And once we find support there, we'll know, okay, let's hop back into it. But what sectors will we be hopping back into? And I think that will be determined based upon key news information, like coming out next week, non-farm payroll at the beginning of the month, unemployment rate. These are important dates on the calendar that are trying to price themselves within the market right now. That's why you should not be having. I saw somebody was saying they're in Tesla calls, and I'm like, what are you talking about? You're in Tesla calls? How are you in Tesla calls? Look at Tesla. You're in an ascending channel, it breaks, retests, and it's continuing to the downside. Why would you be in calls? So this is one reason as to why I try to tell people, be careful with who you copy trade. Be careful with who you're watching in the markets. Because if you have no understanding for yourself and you're being led by those who can't fully educate you on what is happening, like we literally just I gave you, usually this stuff is what I keep behind a paywall. But I said, man, today I'm seeing so many people who are suffering losses and they have no idea as to what is happening within the market. But if they were to just get something simple like my newsletter, they will be able to literally have themselves in a whole different ball game. They will be able to have themselves in a whole different ball game. A whole different ball game. Because you will have clear understanding of what is happening and you can be able to apply it to your trading and to your investing.